Well, hello everybody, LA here. This is the weekly review, August 7th. Today is the 9th. I'm reviewing the 7th week ending August 7th. If we look at what happened, it is a continued push to the top side, and we've seen this for, 4 months now? 2.5% on the S&P, same thing on the NASDAQ. NDX a little bit lighter, didn't get quite the strength there that we saw elsewhere. But we did see it on the Russell. Russell breaks out and gets a tremendous gain comparatively. Gold also adds to its totals on the year. Bonds, dollar, they all sell down. If we look at what keeps this market rising, we've talked about COVID for quite a while. We've talked about the Fed and for the fiscal not consolidation, but continuation. What we haven't talked about is the dollar devaluation that much, and down 10% off these highs. And so, this was kind of like it wasn't that spike high that was up here, but, a tradable high 3 weeks took place as weekly chart. And down to where we are now is 10%, right? It's a pretty good move to the downside. And so you've essentially had assets of all classes appreciate, if you will, 10% if they're dollar denominated. And so the dollar devaluation doesn't look to me like it's going to stop. There is an ABCD structure here that's just completed. So we could see some sort of a bounce, but I suspect a bounce back into this resistance area you see here is probably going to get a regeneration back to the downside. And so I suspect this is going to continue to add fuel to valuations as we know them, as long as they're dollar denominated. What's moving? I told you in a daily report that one of the things I do this weekend is take some time to look at what is pressing higher. Now, we did this and it served us well back, I think it was in April, when we were looking at stocks that were starting to move. That move up has continued, and so it's time to regroup and look at this one more time. So I've created this shared watch list that you can find on the site, Bullish Industry Group Stocks 0807. The criterion was, was the stock higher than end of February? End of February, if you remember, was we climbed up and then we came off hard, right? And so I said, is the stock now higher than where we came off at? So that was the first criterion. The second one, and so that was 6 months ago, 5 months ago. Second question was, is the stock higher now than it was when earning season began? So do we have a higher price now than when earnings? Now, all these stocks haven't reported, but the majority have. And so the question was, are they strong after earnings? Are they strong compared to where they were back before we had the COVID crash? And so I've thrown all these into this watch list. There's 640 of them, I believe. They've got, of course, the stock symbol. There's also the sector and the industry group. You can download this right here. Download this data. It will pop it into a CSV file. And then you can take and divide these things up right into 3 columns, and so they're sortable in that spreadsheet, and that makes it easy for you to manipulate. You just put them in a table and you manipulate them if you want. What are the key sectors? What did I learn as part of this, right? One thing that I saw was what I just brought up, which was the dollar devaluation, and that seems primarily to be boosting all these basic material stocks, and I'll show those in a second. There's also the communication stocks. I think 5G is probably what's moving those, as well as the semiconductors. There's also an increase in the amount of trading that's taking place, probably because people have more time on their hands and the government keeps sending checks out to us. Those are in some of the financials. And then everything else seems to be related mostly to COVID. More things getting moved around, getting shipped to people's homes. The semiconductors, part of that is, everything's moving to the cloud. Everything continues to be internet based. The durables This is food stocks and so forth. The technology, a lot of that, of course, is those are the sectors where we haven't seen people laid off as much, and we continue to see revenues hold up reasonably well. And the same thing in the discretionary. There's some groups that have benefited as a result of COVID. So it seems like there's COVID, there's 5G, and there's a dollar devaluation, a little bit of trading increase. If we look at those sectors I just talked about and break them down and look inside of them, you're going to see some things that we saw before. For example, if you remember last time we talked about grocery stocks, that was a sector that we looked at. Gold and silver, of course, we've talked about before. Communications equipment was on that list last time. I think the semis were, if I remember right. I remember trucking being part of that. All of these were there. They're there again. Same thing here with beverages. They're there again, and there's others as well. These are the groups that are benefiting from what's going on. Now, the way I did this to try to make sure we got a representative sample was I said, of all the sectors in the industry groups, how many stocks are inside those, right? And then how many meet those criterion. And so if we had, let's say we had 20 stocks in this sector or this industry group, and 20 of those meet the criterion, then 100%, right, were participant. And so all I did was take this percentage and then based it on anything 50 and above, 50% or above, made it to this list. And all the stocks are in that watch list that I've talked about. Now, how would you use this? At least the way I will use it is now that we have the watch list, right? Now that that watch list is available and you can pull it in, you can go to Stock Monitor on your tools, pull in that watch list, and then you can see on a daily basis, every day, you can see all these various signals trigger. And you can go look at those stocks when a trigger takes place and ask yourself, okay, technically, is this a good spot? And because remember, we want trend, and basically this list gives you bullish trend, and then we want timing. And the Stock Monitor, right, this is set up to give us the timing through these various signals. And so that's how I'll be using it. I'll be pouncing on opportunities as I see them. Some of them will make it into the watch, into the trades that I show on the site. Of course, I'll be doing some on my own that don't make them because we can't do them all on the site. We just take some sample. But generally, you want the stock, the sector, and general market to all be lined up, and for there to be like, a retrace to a retest regen that starts to regen, or you're pretty sure it's going to regen and you buy that retrace and you try to shoot for the move back up. If we start getting off that subject, if we start looking at the broad market, technically everything continues to be perfect, right? Everything keeps working. We had a swing point high form, we came back, we did a retest regen on this swing point high, we regenerated, extended now, and now if we come back again, what will happen? Another regenerate attempt and try to extend again. And so right now, it's all working. Whether it's on the S&P, whether it's here on the NASDAQ, saw the same thing. Here's the regenerate extension. Or the small caps now, you got to break out multiple swing points, multiple time frames. This is the weekly. You also had to break out on the daily on the same spot here. Target is up here, so another good ways to go on the small caps. More projections higher on the S&P. This hasn't changed. Here's the weekly. We just closed that gap, that big gap that was there from February, end of February, early March. Finally closed it this week. Swing point high is all that remains. New highs probably just around the corner somewhere. Now, what could go wrong? Well, part of what could go wrong is the fact that we're extended again, and this is our proprietary bullish weighted S&P. One of the mentors compiles this, keeps track of it for me, which is great. Hats off to him again for always providing a lot of this. But essentially, this has reached that level where you have to start being concerned about it. 65% on the bullish side, 19% on the bearish side. Usually when you get this, this extension up. If you go back and look at some of these before, like here was a push above it. What happens? You get a retrace on the S&P. Here's another one, retrace. These retrace, big retrace, right? This one here, same thing, retrace. So I would expect we're going to get a retrace here at some point. Now, can this extend a little bit higher? Can it go way up? Sure, all those things can happen. This is not perfect timing, but this is telling you that, hey, we've pushed long enough. We're probably going to see some sort of a retrace set up. What's the bottom line? Right now, buyers totally in control. There's no technical failures, just like last week. The sore spot, if any, is the big cap technology. So we're talking about the FANG stocks, Facebook, Apple, Google, all of those. The three of those six, I think, made new highs. But they, if you go and look at them individually, they're kind of stuck in a pattern. They've been trading in a range, got a little bit outside of it, but they'll probably come back inside that range. And so these are not the ones adding now. That rotation is taking place to some extent, and that is what's continuing to move these markets higher. We're near all-time highs now in the S&P, and with this extension stretching again, we could get a retrace at any point, but you got to expect they're just going to come back in and buy it again when it happens. Weekly prognostications last week, better than expected. Again, the best case is we filled that gap. Next week, I expect we're probably going to see that retest regen off this swing point high sometime during the week. We may start up and then come down. I don't know. But worst case, probably just get to the bottom of this and hold down here. What would be the best case? Now that we filled the gap, go up and actually test and make new highs. That would be best case. That's it for this week. That's where we're at. Stay safe. Take care. I'll see you next time.